Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Monday, the 24th of October. Starting with the FTSE 100, and it's business as usual as far as the slow buy trend that we've had. Support intraday coming in towards the 20-day moving average. That's the purple line at 69.81. Some resistance towards 70.20. But really, it's all about holding the 20-day line and looking towards the top of this rising July trend channel at 7,200 over the next month or so. Any dips towards the 7,000 zone currently regarded as a buying opportunity. RSI at 56, well in the accumulation zone at the moment. On to the DAX, and here we've seen it behave in quite a robust way. We were looking for 10,600 to be broken. Last week that was done relatively easily, and now we're sailing up towards the top of this August trend channel, 11,000. That's likely to be hit, especially while there's no break back below the initial October resistance around the 10,692 mark. So reasonably well defined in terms of what the upside can be here. Any dips towards 10,700 currently regarded as a buying opportunity intraday. Onto the US markets, and for the Dow, we're looking at a situation where we've got the long candles on any dips towards the 18,000 zone. So really that suggests that while we're above currently at 18,050, this market's heading higher. Initial target there, the 50-day moving average 18,313, and also that August resistance line. If you're cautious, you wait for an end of day close above that 18,300 zone before going long or buying the dips towards 18,000 as an alternative strategy. On to the S&P, and here we've got a situation where there's again been the long candles on probes towards 2120, 2130. That ties in with a May uptrend line around the 2120 level. Top of the range 2160, which is the 50-day moving average level, and an August resistance line. If we can break 2160 over the next week or so, then 2220 plus would be the target for early November. Onto the Nasdaq, and here we've seen it's been the 50-day moving average in play, really 48 to 17, the blue line there, and bouncing off that intraday. Clearance of 48.50 on an end of day close, or rather weekly close basis, which we had, should lead us back towards 4,900. But it may be worth at least being cautious unless we get a weekly close through 4,900 before getting too excited about any new big leg to the upside for the Nasdaq, even though we do seem to be in a rather bullish trend. Onto the currencies, and cable, something of a conundrum at the moment. Here we can see that it's been hugging the 10-day moving average, currently around 122.40 over recent sessions. That should be a bullish move. It should at least mean that we have a little spike towards 123, 124 over the next couple of sessions, even if that is then an opportunity to go short, or an area to go short into. But for the moment, mildly bullish as far as cable is concerned. It's in contrast with the euro, which is still under pressure at the moment, just below the 109 level. Still the risk of heading back towards 108, 107.50 even, which is the initial support of the year, even if that marks the limit of the downside for this market. RSI 29, so oversold at the moment, but not overly so, and there is at least the possibility of a turnaround from the 107.50 to 108 area if we do actually probe that low. On to the yen, dollar yen, which, as I've said on several occasions, is probably it's been the best behaved of the major crosses. We've got a line of resistance here from earlier this month towards the 104 area. Want to break that on an end of day close basis before being able to target 107.50. But that does seem to be in play at the moment at the top of an August rising trend channel, and also ties in with the 200-day moving average at that 107.51 level. So breaking 104 should do the trick for dollar yen. Finishing off with gold, and here you can see that we've been hugging the 200-day moving average in recent sessions. That's 21.69. Situation is that
basically, while above the 10-day moving average of 12.59.1, would give the benefit of the doubt to a pop towards 12.80 or so. But at this stage, only really well above 12.80 would finally negate the prospect of a fresh test of recent lows towards 12.40, 12.50 as a mid-move consolidation on a potential breakdown. So all to play for there as far as the bears are concerned, and everything to hope for there as far as the bulls are concerned on gold. That's it from me. More updates at the same time tomorrow.